asking ourselves, what are they telling us? Soon after that, we'll have another ECI wage report, which, as you know, is a report that we like because it adjusts for composition and it's very complete. And the one we got, I guess it was yesterday, was constructive. It shows wages coming down, but still at a high level. They're still at a level that's well above where they were before the pandemic. So I don't want to put a number on it in terms of months, but as the accumulated evidence comes in, it's going to be reflected in our assessment of the outlook, and that will be reflected in our policy over time. But I will say, though, it is our job to restore price stability and achieve 2% inflation for the benefit of the American public. Market participants have a very different job. It's a fine job. It's a great job. I did that job for
This will be
years,
a selling point for me.
But in one form or another. But, we have to deliver that. And so we are strongly resolved that we will, complete this task because we think it has benefits that will, support economic activity and benefit the public for many, many years.
Thank you, Michelle. Thank you, Fed Chairman, for taking the questions. So you've talked about we had solid job growth. Edward Lawrence from Fox Business, by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to a 6.5% CPI inflation. Is the hard part yet to come to go from 6.5 to 2?
I don't think we know, honestly. So we, of course, expected goods inflation to start coming down by the end of 2021. And it didn't. It didn't come down all through 22. And now it's coming down, and it's coming down pretty fast. So I would say this is not a standard business cycle where you can look at the last 10 times there was a global pandemic and we shut the economy down and Congress did what it did and we did what we did. It's unique. So I think certainty is just not appropriate here. Inflation, it's just harder to forecast inflation. It may come down faster. It may take longer to come down. And, our job is to deliver inflation back to target, and we will do that. But I think we're going to be cautious about declaring victory and sending signals that we think that the game is won, because we've got a long way to go. It's the early stages of disinflation, and it's most welcome to be able to say that we are now in disinflation. But that's great, but we just see that it has to spread through the economy and that it's going to take some time. That's all.
How long do you see then the federal funds rate remaining at this elevated level?
So my forecast and that of my colleagues, as you will see from the SEP, and there are many different forecasts, but generally it's a forecast of slower growth, some softening in labor market conditions, and inflation moving down steadily, but not quickly. And in that case, if the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year, to loosen policy this year. Of course, other people have forecasts with inflation coming down much faster. That's a different thing. If that happens, if inflation comes down much faster, then we'll be seeing that, and it will be incorporated into our thinking about policy.
Simon.
The Nasdaq's doing
Chair
good.
Powell, Simon Rinovich with The Economist.
Netflix
I may
doing
ask
good.
a further question
Tesla's
with language
doing
around ongoing increases. That, of course, implies at least 2 further rate rises. If you look at Fed Fund futures pricing, the implication is that you'll raise rates one more time and then pause. Are you concerned about that divergence? Or do you think if everything breaks right, is that a plausible outcome?
I'm not particularly concerned about the divergence, no, because it is largely due to the market's expectation that inflation will move down more quickly. I think that's the bigger part of that. So again, as I just mentioned, our forecasts, there are different participants have different forecasts, but generally those forecasts are for continued subdued growth, some softening in the labor market, but not a recession forecast really. Given our outlook, I don't see us cutting rates this year if we get our outlook turns true. As I mentioned just now, if we do see inflation coming down much more quickly, that'll play into our policy setting, of course.
Hi, Chair Powell. Scott Horsley from NPR. One of the changes in the statement this month is that the committee is no longer listing public health as among the data points you'll consider in assessing conditions. What should we make of that? Does the Federal Reserve no longer see the pandemic as weighing on the economy?
That's the general sense of it. Look, we understand, I personally understand well that COVID is still out there, but that it's no longer playing an important role in our economy. And, we kept that statement in there for quite a while. And I think we knew we would take it out at some point. There's never a perfect time. But we thought that, people are handling it better, and the economy and the society are handling it better now. It doesn't really need to be in the Fed's monthly or post-meeting statement as an ongoing economic risk, as opposed to a health issue.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. I wanted to go back to another thing that Fed Vice Chair Ledger said recently. She said she doesn't see signs of a wage price spiral. And I'm wondering if you agree with that.
I do. Yeah, I do. I don't see that yet. But the whole point is, once you see it, you have a serious problem. That means that effectively in people's decision making, inflation has become a really salient issue. And once that happens, that's what we can't allow to happen. And so that's why we worry that the longer we're at this, and the longer people are talking about inflation all day long, every day, the more risk of something like that. But no, there's not much. It's more of a risk. It always has been more of a risk than anything else. By the way, I think it's becoming less salient, and people are, we pick that up in conversations, and I've seen some data too that show people are, gradually, they're glad that inflation's coming down. People really don't like inflation, and as we see it coming down, that could also add a boost to economic activity. You look at the sentiment surveys now, and they're very, very low, with 3.5% unemployment and high wage increases nominally by historical standards. Why can that be? It has to be inflation, right? So I think once inflation is seen to be coming down in coming months, even, you will also see a boost to sentiment, I hope.
So that's what you're looking at most closely, is consumer expectations.
That's at the very heart. Is consumers and businesses. Essentially, we believe that expectations of future inflation are a very important part of the process of creating inflation. That's a sort of a bedrock belief. In one way or another, it has to be. We think it's important. And in this case, I would say the risk 8 months ago or so, longer-term inflation expectations had moved up. We moved quite vigorously last year. Expectations seem to be well anchored, including at the shorter end now, not just the longer end. So it's, and I think that's very reassuring. I think, the markets have decided and the public has decided that inflation is going to come back down to 2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting inflation down. The fact that people now do generally believe that it will come down, that'll be part of the process of getting it down, and it's a very positive thing.
Thank you, Chair Powell. Greg Robb from Market Watch. In the minutes of the December meeting, there was a couple sentences that struck people as important. When the committee said participants talked about this unwarranted easing of financial conditions was a risk, and it would make your life harder to bring inflation down. I haven't heard you talk much about that today or in the statement, so I was wondering, has that concern eased among members, or is that still something you're concerned about? Thank you.
I would put it this way. It's something that we monitor carefully. Financial conditions didn't really change much from the December meeting to now. They mostly went sideways or up and down, but came out in roughly the same place. It's important that the markets do reflect the tightening that we're putting in place. As we've discussed a couple of times here, there's a difference in perspective by some market measures on how fast inflation will come down. We're just going to have to see. I'm not going to try to persuade people to have a different forecast.
Yeah,
but our forecast is that it will take some time and some patience, and that we'll need to keep rates higher
very volatile,
for longer.
man.
But we'll see.
This is that buying area right here, man. That was the golden buying area. I definitely would have took profit. Boom.
Hi, Chair Powell. Brendan Peterson with Punchbowl News. I
Take
wanted to
the
ask
profit.
if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer, faster to that drop dead debt ceiling deadline. Could it play an effect as we get closer to that drop dead deadline this summer?
It's very hard to think about all the different possible ramifications, and I think the answer is basically I don't think there's likely to be any important interaction between the two, because I believe Congress will wind up acting, and as it will and must in the end, to raise the debt ceiling in a way that doesn't risk the progress we're making against inflation and the economy and the financial sector. I believe that will happen. I believe it will happen. We of course will monitor money market conditions carefully as the process moves on. For example, the Treasury General
going
account
back
will
green.
shrink down and then it will grow back up, and we understand there'll be lots of flows between there and the overnight repo facility and reserves. We understand all that. We're watching it.
That
Carefully.
24K right there, man. If it blasts through that
Thank you
24K,
very
man,
much.
we're out of here. We're out of here, man. I just need 2 more days. 2 more days before you bust out of this 24K. This right here, this is a strong resistance right here. Strong resistance. This is that buying region, but right now I wouldn't be buying right now. I wouldn't buy. Let that cloud get up a little bit more. You feel me? Wouldn't be buying. Well, I guess that's it right there. Let me see if we got a dip coming. All right, ain't that bad, but it was a nice little hourly candle right there, right before the beating. It was a nice little, what was that? Almost 2%, man. Woo! That would have been a nice trade. 10x leverage on that? 10x leverage on that? 50x leverage on that? Oh, man, that would have been great. 50%? Yeah, I can see us going back down again. I was thinking that we was going to retest $20,000, but based on what the Fed was talking about, he really wasn't transparent about is he going to cut rates or not. So the good sign is the NASDAQ is in the green. Tesla, excuse me here, see Tesla. Tesla is up like 5%. Tesla's doing pretty good, man. It's on a tear today. Oil was down, gold was up. Let's see what else was up, man. Netflix was up. So the DXY was down about 1% today. Look at that. Boom. So I bet you people probably buying that up too. Let me see. Yeah, for sure. Let me see. Let's see. Yeah, this is definitely maybe a buy. You got to use these indicators, man. See, if you don't know, I'm learning how to trade. I'm learning how to be a trader. So, Cuz is teaching me how to trade a little bit better. He's helping me with my indicators. Sometimes you got to pay for this, but this type of version of a trading view, you got to pay for this one, man. It tell you when to sell, it tell you when it's a good time to buy. So pretty much if you bought when this buy signal with a trigger buy, it's basically saying it's a good time to buy. I would have bought that, waited, boom, bust out of that cloud right there, boom, I sell, and I just wait until it's in my buying zone again. You know what I'm saying? Get your 2%, your 3%, call it a day. You know. All right, so that's it with that one, man. It's saying sell, meme war begin. That dude had got a mask on. Okay. All right. I think I'm gonna relaunch the stream, man. I just want to catch that real fast, so I think I'm gonna relaunch the stream. Yeah, I think I'm gonna relaunch it. So I'm gonna end this and come back on. That right there.